Welcome to Digital Asset News. Take the top stories in cryptocurrency and digital assets and break them down to bite-sized pieces. Today, we've got one big story and one little story, depending on which way you want to look at it. So first up, Nasdaq is launching an institutional-grade digital asset ecosystem in a move to spur token economy. And this is amazing to me because just a couple short years ago, institutions wouldn't have done much, if at all, with any of cryptocurrency digital assets, and here we are. Also, a tie-up between Chainlink and Tezos is finally happening on top of all the other partnerships that Chainlink already has. And this is just a subtle reminder for me to buy more Chainlink. So let's break into today's stories. First though, let's take a look at what's going on with the market. So 86.75, let's take a refresh. 87.18, so going up and down. So I think we had actually crossed $9,300 at one point for Bitcoin. It is April 30th, around 1 o'clock in the afternoon here in Texas. And yeah, it's been a big week and we keep going up and down. Not too much down, just a little bit here and there. But Ethereum, XRP, Tether, they're a little bit of a decline, but not too much. Regardless, it has been a monster week for cryptocurrency digital assets, and it just keeps getting better with today's top story. So again, Nasdaq is launching institutional-grade digital asset ecosystem. Now, I like these articles, but I like to go to the actual primary source. So I took a look at Nasdaq.com, where they talked about the journey toward digital assets institutionalization, and this is where they got their information from. So Johan Toll, head of digital assets at Nasdaq, explains and discusses a recently announced technology agreement with enterprise blockchain software firm R3. So first of all, let's take a look at the Nasdaq's digital asset website link, and talks about, hey, here we are, digital assets marketplaces bringing proven exchange technology to digital assets, which is pretty amazing. And they say that this is what it is. Nasdaq's innovative marketplace technology, or the Nasdaq Financial Framework, serves as a robust foundation for digital asset exchanges to build and expand their businesses with the security, reliability, and scalability needed to manage demands from institutional and retail investors, market participants, and regulatory authorities. Now, if you're new to the channel, there are varying aspects and beliefs as far as regulation on this and a lot of different areas out there as far as in cryptocurrency land. So on one side, you'll have people who are like, no, chaos, freedom, nobody should step foot in any way, shape, or form. There should be no regulation. Leave us alone. We will self-regulate, no problems. On the other side, other people are like, hey, we need some more regulation. We need a lot of it, matter of fact. We should lock everything down, hold totally secure state, bring it all in. And then that's kind of like how we are as far as the spectrum. But what I have found is that the majority of the people are somewhere either in the middle left, or middle right, or whatever you want to say. They don't really go in those extreme types of positions. I personally believe that we should have some form of regulation, not over-regulation to where we are in like a total lockdown communist state where the state is surveilling every single move. Or I don't think that we should have no regulation because we see what happens when we have a bunch of scams and exit strategies or exit scams where these exchanges will just pick up, take all their money and go, well, sorry, sucker, we're out of here. So I think we do need some form of regulation. All right, moving down, it gets interesting because of this quote. And it says here, 5 aspects need to be aligned to institutionalize digital assets. Technology needs to be mature. We need to identify valid business cases where real problems can be solved. The projects must be funded properly. Regulators need to be on board, and market participants need to be prepared for the transformation. This is right on their website, and it's going to pay dividends in a little bit, and I'm going to tell you why. So moving down, Johan says, in the coming months, we believe we will see both existing and startup exchanges look more consciously into exchange-grade systems that can evolve transparency and security standards align with their capital market counterparts in order to grow liquidity and attract widespread investment from all types of investors. So essentially what they're doing is they're like, look, exchanges, we know you want to grow We want to give you access to what we have, which is institutional investors. So let's get together. And that's essentially what's going on. And they asked him the question, well, how would you describe the journey toward institutionalization of digital assets? And he states, 5 aspects need to be aligned to institutionalize digital assets. Technology needs to be mature, valid business cases, funded properly, regulators, and the people need to be prepared for the transformation. Exactly the quote that we saw on the website itself. So that is a message that they're pushing forward, and we'll see how it works out. Now, this next part spoke to me because when he starts talking about the proof of concept stage is gone and the prototypes have actually been built, you have to understand that in 2017, when I got in, you could make billions of dollars just on a white paper, just on nothing. And there was nothing built, and they say, well, that is good promise, so we're going to invest into that. These days, it does not cut it. You have to have an actual working, functioning product, and we have to see it have some type of use case. And I think that's where the money is. And I think a lot of these cryptocurrency digital assets that are out there that have been toiling for years to really lay the groundwork are the ones that are going to pay the most dividends. And that's why I have the different digital assets that I have. So he talks about generally market participants feel comfortable with the technology behind digital assets. They're confident that it's mature. They're preparing to be part of the transformation. The discussions have already shifted from innovation centers to the business owners who want to solve problems using modern technologies such as cloud, machine intelligence, and blockchain. And this is the most important part. They have the money to do it. So everything is aligning just as it should. We took those, in 2017, that big bull run, parabolic bull run, was just a dry run for what's about to happen, because that was just based on hope and dreams, smoke and mirrors. There was not real products out there that could really scale. And even if you had a product, you couldn't scale it, it just couldn't work out like that. Now there's been so much work of laying the track. I think we're going to take off, and we're going to take off big. Moving forward, they state, today you announced a collaboration with blockchain provider R3, and he says, we initiated discussions with R3 around its Corda enterprise platform. Working together, we are well positioned to create an agile and resilient solutions purpose-built to support the entire life cycle of a digital asset, covering issuance, trading, settlement, and custody. And that is amazing. That is a big thing that has stopped institutions getting into digital assets and cryptocurrencies. They're like, well, who's going to control this? Well, who's going to happen? We need regulation. Who's going to take, because we don't want to be a Mt. Gox. We don't want to lose everything from hacks, or we don't want to be a Quadriga where when the owner just gets up and apparently dies and all the money is gone. That's not going to fly. So now that all these things are into place, I think that we're going to have a big year. But when I think about R3 Corda, I always think Ripple. I'm going to tell you why, because this is directly from R3's website. R3 launches Universal Settler application to facilitate global payments on Corda. XRP, the first settlement mechanism. XRP is the first globally recognized cryptocurrency to be supported by the settler, bringing the Corda and XRP ecosystems into closer alignment. And this was back in 2018. Mind you. So this is quite a ways away, or beforehand. So just a little history on these guys. They had a little tiff as far as legal interaction. Ripple had promised them a boatload of XRP, and we're talking billions and billions and billions of XRP for cross-border payments or payment systems. And they were going to buy it at a very steep discount. And then when the price went up, Ripple's like, maybe not. We're going to hold back on that. Then they went to mediation and they got it all sorted. So for me, when I think about R3 and Corda, I know that they're not exclusive. They can use whatever payment systems they want, whatever type of cryptocurrency. But me as a business owner, if I just bought billions of dollars of a product, I'm going to use that product and I'm going to push it on all the people that I do business with, because I'm like, this is a great product. You need to use this because I need to make a profit. It only makes sense. Now, I could be wrong. Tell me what you think in the comment section below, but let's move on. So moving on, it states, while R3 will certainly play an important role, it's useful to note that our collaboration, he's talking about R3 and Corda, is a non-exclusive partnership, and we continuously collaborate with other blockchain providers such as Symbiont. Again, I don't know what Symbiont is. If you have any information, put in the comment section. I'll take a look. Now the question's asked, looking ahead, how do you see digital assets develop in the future? And this is the conclusion of the article. He states, in the near future, many processes that incumbent marketplaces currently operate manually will likely shift to a digitalized workflow, enabling market participants to connect easily with one another to trade those assets. And again, to me, this is amazing because I remember when institutions and these big players like Nasdaq would look down on us like we were just playing with some nerd money that would never amount to anything. And I mean, here we are today where they're like, hey, come on in. And, we want to, we're going to roll out this nice red carpet and we'll do everything for you. Just come on and work with us. Come on, we're good. Come on and work with us. Well, time to bend the knee because all this time that you look down, now it's time to pay the piper. Anyhow, moving on, it says new types of financial and non-financial marketplaces for trading of digital representations of physical assets and certificates will be created. So this is a powerful statement. New types of financial and non-financial marketplaces for trading of digital representations of physical assets and certificates will be created. What that means is you will be able to tokenize anything physical or non-physical or certificates that you can think of. So if you can think of, like, let's take a skyscraper in Manhattan, they're selling it. Well, it's pretty tough to find a couple billionaires to pull together to buy it. However, what if you could crowdfund that? You could tokenize it. You could sell it to thousands of people where they're going to own 0.02 of it for just a little bit of money. And now everybody has a piece of that pie. And that could be for land, that could be for property, that could be for vehicles, that could be for art, that could be for anything you can think of that you can tokenize. And that, I think, is what is going to push digital assets and cryptocurrencies way, 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 way into the forefront and really get things rolling. Just my opinion. And lastly, it states their participants will be able to trade and track assets easily through their entire life cycle by operating on a harmonized shared platform. So sure. So here's my question for you. Is this a good or bad thing? Is it good or bad that these institutions are coming in? Or do you think this is just the inevitability, like they have to be here anyhow? Now, for me personally, I think they're going to come here anyhow. And I see the good and the bad. I see the good because it's going to bring liquidity. It's going to bring legitimacy to this whole area. And I think it's going to be good in that respect. What I don't see as good is that they're going to bring all their bag of tricks with them, which is, we've already seen that in March when there was a huge crash. A lot of these institutions, we're going to get into this later, are already here. They're buying up digital assets. They are hoarding. They're hodling, I should say. And the problem is, though, is when the traditional market crashes, their baby, then they say, hey, oh man, this is bad. This is after hours, this is the weekend, or this is whatever. I need to liquidate something to cover all my positions. And what do they have to liquidate that's never closed? Digital assets, cryptocurrencies, Bitcoin, Ethereum, all those things. And boom, they liquidate, they pull the money out, they cover their positions, and they roll again. And that's a problem. Also, what's a problem is that we have a very small market cap, 240 billion. That's nothing. That's nothing. There's trillions of dollars in the stock market. So when they see this, they're like, oh, we can push this and pull this any way we want to. So when we start to talk about whale manipulation, it's here. I think there's more manipulation personally in the stock market because that's just how it is. It's way bigger. And if you look at the percentage-wise, I believe it to be true. But manipulation is all over the place, and it's bad. This leads me to my next point, which is, so we have all these people coming in, these institutions. We know it's a good thing. We know it's going to be huge. So what are these investors saying to their clients? And this brings me to my next point about Bitcoin, which is outperforming every asset so far in 2020. As it went past $9,300. Now it came down to $8,700, but still, it's going to be a huge year. It's just going to be a huge year. With the Bitcoin halving on May 12th, I don't see any way around it. This is an article from Alex Davnia. He always does good stuff. So what he's talking about here is Bitcoin is miles ahead of every major asset as far as like to its year-to-date performance. And this is from Alistair Milne. He just put this information together. He said, look, here's the year-to-date performance of Bitcoin. Plus 27%. That's amazing. And I don't see why it's not all over the news, every news outlet, because they talk about gold, they talk about Nasdaq, they talk about S&P 500, they definitely talk about oil. But do you hear a lot of talk about Bitcoin and cryptocurrencies? I don't. I don't hear much at all. I mean, Fast Money every so often and Pompliano, they're the only cheerleaders we really have. Besides that, they should be talking more about this. And that's why I think that these institutions, these financial planners, these hedge fund players, they have to recommend it to their clients because it's been beating the tar out of everything so far. Anyhow, so when I see gold, I always think about Peter Schiff, but I actually like Peter Schiff. I think he's a great marketer, and he's kind of like a WWE wrestler, if you think about it, because he's just kind of boisterous. He's kind of like that heel, like, no, this is the best thing of all time. He doesn't really believe, I don't think he really truly believes that Bitcoin Bitcoin's awful or gold is like the end all be all. I think he owns Bitcoin. Anyhow, moving forward, the cryptocurrency has surged more than 20%. We know that. And then here's some numbers. Unless it plunges below 77.07, Bitcoin's 7th consecutive week of gains is pretty much unlocked. Last time it happened, Bitcoin started its enormous rally, Q2 2019, and I believe that was $12,000. Check me if I'm wrong. Tell me in the comment section, but I believe that it popped up that high. So if it's looking that good, I'm fine with that. Lastly, it states the massive upward move was primarily dominated by spot exchanges. April 12th, Binance recorded its all-time high volume of surpassing $11 billion in only 24 hours. So here's my thoughts. Bitcoin and cryptocurrency and all digital assets, almost all, are going to do fantastic this year because it's just inevitable. We've built the track, we paid the time, we paid the piper. It's time for us to get our rewards, and I think it's going to happen. Now, we're going to have those peaks, and we're going to have the troughs. We're going to have the highs and the lows, but it's going to continually go up, I believe. Now, I think there's a crash coming. When the stock market crashes, maybe around the end of Q2, maybe around June or so, especially with these unemployment reports and the GDP coming out. But that doesn't change the fact of where this entire asset class is going. I see this as a 100 trillion asset class. Let me say that again. I see the entire cryptocurrency digital asset market as a 100 trillion asset class, and it'll dominate everything as time moves forward. So that's how I see it, and I just kind of put the pieces together. So if I see that, I think, well, there's probably other institutions that look at the same thing, because look, this is how we're doing as far as Bitcoin goes this year. Well, how did Bitcoin do last year? Well, let's take a look at what happened last year. This is from Binance Research. Bitcoin crushed everything. Look how well crude oil did first of all last year, and we know how it's doing right now. It'll probably turn around, but who knows? Tech stocks, U.S. real estate, U.S. stocks, global stocks, natural resources, bonds, gold, agriculture. It crushed it, right? So if you have an asset class, Bitcoin, Ethereum, XRP, Chainlink, Cardano, all these different places, all these different cryptocurrencies that are doing so great, not just last year, but now this year, and how it's going to do at the end of the year, what do you think that these financial planners are going to do for their customers? It would be financial negligence to not recommend it. Now, I think that's why we have to get some type of regulation in place, because some people say, oh, well, that they can't do that. They need to have regulation as far as custody and whatever else. Look, they're already here. When we go over Grayscale, I'm going to show you how much hedge fund managers actually put into it. So if you got places like Fidelity Digital Assets, has 2.46 trillion assets under management. They have their own digital assets section. Ameritrade, 1 trillion assets under management. Then you got somebody like Van Eck, who in January 2020 pretty much said, and they're huge gold bugs, they said, look, as good as gold is, crypto beats the pants off us. So we need to invest into Bitcoin. And then you take a look at Grayscale, their digital asset investment report, Q1 2020, what did they tell us? Well, they said, look, the majority of investment for just the first quarter of 2020, 88% came from institutional investors, dominated by hedge funds. And in the last 12 months, guess what? It was a measly 79%. So it's only grown, and it will only get bigger. And that's why I truly believe it doesn't matter what's happening right now or a week from now or 2 months from now. In the end, cryptocurrency will beat the pants off of everything. And that's it. So tell me what you think in the comment section below. Do you think I'm full of it? Do you think that there's no way that could happen? What do you think about that $100 trillion asset class, what I just said? Is that reasonable? Or do you just think I'm crazy? Let me know. And then we'll finish up with just a little fluff piece here. Not fluff piece. Chainlink is one of my 7. If you don't know, here's what I'm invested in. So this is what I've got. Bitcoin, Ethereum, XRP, Chainlink, Cardano, EOS, Tezos. So those are all the ones that I have invested in. So if I talk about this, it's probably because I'm biased. And when I talk about Chainlink and Tezos, well, it's because I own them. So, but I couldn't pass this one up. Again, Alex Davnia, great job. So he says there's a tie-up between the two ecosystems, which was funded by the Tezos Foundation, and they're going to work together. Chainlink's co-founder Sergey Nazarov said that he was looking forward to the collaboration. He states, "We look forward to bringing Chainlink's Oracle infrastructure to the Tezos ecosystem, supplying Tezos developers with high-quality data to power secure, truly reliable, decentralized applications." And right underneath that, there's another partnership. Chainlink price may surge 24% as project partners with Ethereum. And then it talks about Tezos smart contract, and they're going to work together. And then also another partnership with such juggernauts as Google and Oracle. Please check me on that one. That's what this article states. I've had other people say they're not partnered with Google. All right, well, I couldn't find one information way or the other, so let me know. In February, its Oracle services extended beyond Ethereum after multi-chain platform Polkadot announced their integration. And meanwhile, the Celsius network started relying on Chainlink's price data feed in late March to increase the level of transparency. So I know a lot of you in the comment section have said you need to check out Celsius. I will get to it. There's so much things to look at. But look, in my personal opinion, I got to buy more Chainlink. That's what it comes down to. Now, I dollar cost average. I'm not a trader, but maybe it's time to increase the price that I set every single week for Chainlink, because I buy all of them every single week, all 7. So look, that's it. So thanks for sticking with me through the rants. Really appreciate it. If you like those videos, maybe 2 more is going to pop up on your left and right. That's curated for your viewing pleasure by our pals at YouTube. And that's it. So thanks a lot. See ya on the next one.